TradeTheNBI.com. This is John's report is for the 1st of November. The fireworks continue. We've seen since the bottoming out here at 3,500 on the ES, the S&P 500, just a continual build. And what was interesting about this is this all took place during what was typically the lockup period for corporations, that which shows bigger money players got involved in pre-jacking price because now they're available to jump in. Of course, they're going to be doing that at slightly elevated levels. I mean, from 35 to 39, it's a significant move. And it's been slow, steady. A little bit of a hiccup occurred when we had that NBI white move, but at that particular point, it was at the same time that we had the negation of it with the green DOC, which is midterm buyers that having lifted, as well as we had the orange dip below red and red DOC rising, which the power of that is clear. And that was all during the time that short-term buyers literally were out of it and just resetting, waiting for the next signaling. And as that came, we've just pushed back up and all the way back to the 50% level, which we were expecting, even when we were in this back and forth range, because any move of white NBI at that point would have been well, not catastrophic, but it still certainly would have led to a much deeper pullback to the 0%. And we can see here NBI Magenta riding beautifully above the yellow line, getting up there. We're in the 40 range, but it can go much higher, as we've seen. We've had spikes into the 50s and higher than that. But at any point, the Fed could pull the rug out from the optimism of things. So, and you have the war. So any of those things can take place during it, but at this particular stage, the market's really excited in the broader standpoint. You can see how much more lagging the NQ is, and this is the technology sector's really been suffering and had quite a bit of drawdown simply because of just dynamic changes and the fact that it had progressed so much faster and further than the S&P prior to. So it's just sort of an evening out of those things. But the MBI readings pretty much identical, not as strong from a DOC standpoint with the crossovers that already took place on the S&P. So that could be a little bit of a lag for the S&P in some areas. From an oil standpoint, this is where I always get to hear these stories nonstop. Oh, the dollar is dying, it's dead, blah, 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 blah. When you show me oil in the upper 20s, then you can tell me the dollar's got issues. But for now, tell me what country doesn't have to get a hold of US dollars to buy oil, gold, all of these different commodities that are used on a regular basis. When that happens, yeah, fine, we can talk about that. But and it's evident. It's right here. When, as the dollar has doubled, you've seen the euro collapse because they're in desperate need for this oil they don't have anymore. I mean, when they had the Russian oil, it was cheap, it was easy. Supply. Welcome to the real world of supply and demand, where you actually need things and have to pay for them. It's a remarkable difference than the academic world of talking about stuff. You actually need dollars. They need twice as many dollars as they needed just a couple of years ago in order to buy the same amount of oil, but they actually have to buy much more oil, so they need even more US dollars. Well, they're just trying to dump off euros to somebody and print as many as they can in order to get that extra dollar to buy the oil. So yeah, under a dollar for the euro. Um, it's not rocket science, but it's a lot more complicated than some people want to make it, who have all these, varying theories about the collapse of, fiat currencies and stuff. And it's like, crypto is not giving you the better answer at this particular stage. Bond market in this particular case, we're looking at U.S. Treasuries through TLT, the 20-year, right in that range of what I talked about in the expectation. We were in the 150s when we saw the beginnings at the start of the year of where inflation was going, and we could see that the Fed was just behind the curve on the whole thing. But in the reality, nobody really believed the Fed had what it took to actually do anything about it. They still don't. Again, I think they're just going to raise the target, and they need double-digit inflation anyway for several years. The problem they've got is you could have gotten away with double-digit inflation for the couple of years if you had contained spending and or reduced your deficits, in which case then the value of that debt would have dramatically dropped. But in this case, they're just accelerating. Now, that gets into the secondary question of, Well, when the treasuries that are issued like this are being paid to the Fed gives its profits back to the US government as its settlement. So did the debt ever really exist? It's just kind of a paper shell game. I know it's hard for people to grasp, but at the end of the day, they don't really owe that money to anyone. It does just, they just created it from nothing, and it will go into nothing, because all that treasuries that the Fed bought will just let expire, and then what? It's gone. Um, if you weren't creating new, but they keep creating new, so it keeps going. And from a gold standpoint, you would think that that would be a tremendous play for gold. It absolutely is. Um, the reality is, though, as long as those fiat currencies are still believed in and still used, and there's faith that there's going to be settlement in them, you're not going to have this apocalyptic dream that people have talked about since I was, knee high to a grasshopper. Uh, it just doesn't work that way. But this is some people wanting to ignore the realities that exist. And this is what happened in the Bitcoin world, where they just thought that the whole system had to collapse because this was such a great alternative. And as I pointed out years ago, until it is readily accessible as a rate of exchange amongst people, um, without the complications that exist, no, it's still a reserve of value that has a limited production value. All those things are true, but the same could be said about artworks, which is why they appreciate at irregular rates. And this is the same kind of situation you have here. Now, has it built in some stability? And certainly in a monetary crisis of, conflict, could it have some, expanded value? Absolutely. Is it moniker that people use to trade? Are there complications with it? Absolutely, because in a crisis, will you even have power? Will you be able to make an exchange? Will there be exchanges that exist? These are a lot of unknowns, but from a speculative standpoint, these are certainly playable. The fact that once they converted to futures, which is something I talked about, as soon as they were instigated into the futures market, I pointed out that they would have a much more difficult time, and that they would be subject to the shorting and or other manipulations. And while we use the term manipulation, it's just money moving in excess in one direction to force a movement. Some, depending on how large they are, can have a movement for a longer period of time, others for a shorter period of time. This is why we measure it in our form of the DOCs, and why you hear me talk about short-term buyers versus midterm and long-term, because there is a difference, and the amount of momentum that they each have and their ability to sustain a move is different. A rising red DOC and consistency is far more powerful than the short-term burst of the steel coming from below. However, the short-term move for the steel coming from below can be explosive. Sure, it just tends to end up with a lot of positive extremes and not be sustainable, and that's why they refill. So it's just a practical explanation of the construct behind it. We can see that from the first peak, now we're forming a second peak. The question is, will we break to the highs? Uh, it's going to be interesting, because this is going to have to come back a little bit here from the explosion. But if it breaks into the new high range, then I would look for a repeat back down to that 100%, whatever breaks past, and we get our first sell signal. And then from there, it'll be critical to maintain the support at that particular junction. But at the end of the day, I promised that there would be just as much volatility for November as going into October was a perfect setup for it, because again, you have a lot of this uncertainty, and the uncertainty builds excitement in certain directions for short periods of time. So we get these sell-offs, all of a sudden the dynamic changes, you get buys, and from an intraday standpoint, it becomes really nice because we just had this beautiful up and down action, every positive extreme in that coming back, getting filled, new buy setups created, comes back down, does the exact same thing. This one really was a very decent buy. Look at the algos on that. We had the block out that was the yellow dots, but literally right here open, we had the magenta leading in that, and it was just before the crossover of DOC green to cyan. At a minimum case, at the 38%, that should have been green as well. So I'm going to take a look at that one. But clearly, with all the bullish elements needed, was certainly there. It may have been the negation of being negative 13.5 for the red DOC. Um, but even still, that should have converted it right there. So I'll look into that one and find out what the causality of that is, because that just needs to change, because that's a pretty clean signal. And then just that beautiful basing. Once those yellow dots ended, we still had MBI white leading, but then turnaround conversion right there. We just weren't getting any dip of orange, and then it happens. There just wasn't the momentum strength building within there, and finally it did convert, and we took off. That's the long and the short of it. As always, though, trade well. Look for me on the Skype chat, and we're excited for a new month.